Hi, everybody. Welcome to another episode of 10,000 Roads to Financial Independence. Today, I have Candace Pilgrim with us. And Candace is a apartment syndicator and the real estate investor herself. And she's focused on acquisitions, asset management for apartments in the Alabama area. Welcome today, Candace, to our show.
Thanks so much for having me.
Awesome. So very excited to kind of have Candace on the show because apartment syndicator, women apartment syndicators, not very often we get to see them, especially people who are actually, asset managing and doing a day-to-day operation. So we have Candace today here with us. Candace, we always start our show by kind of talk about what made you who you are. So if you kind of recall back in your early life, maybe there's an incident, maybe there's a person that kind of gives you the influence to say, hey, I got this, I can be an entrepreneur, like myself, go out on my own. And also through like kind of investment side too, it's like investment becomes very important for me. So along that line, can you kind of share with us, where this kind of all started, or the person who kind of influenced you the most? Yeah.
Yeah, so there's several different directions I guess I could go with this question. That depends on, I guess, which side of the answer you want. So I'll start with the one person I feel like has really influenced me early on was my dad, because all the rest of my family love him to death, but they're definitely that 9 to 5 mindset. They were always the ones to tell me, don't invest, you'll lose money. Have you heard about so and so losing money? More of the negativity side of investing and taking risk. But my dad, on the flip side, he was always the one to tell me, you can do anything you set your mind to, and if you never take risk, you're never going to know. And he was the one to kind of push me into wanting to have that entrepreneur type mind. So he's definitely the one person. He actually passed away last August. So
Sorry.
when he passed away, it almost just motivated me even more to just go out and really, live the life he wanted for me. So that was big for me. And then also adding to that, a separate topic, but same topic, I guess, is my husband and I love to travel. So when we had our electronics wholesale company for 8 years, it was not really a company that we could outsource, or, that idea of working on the business and not in the business. It was really hard to do with that business because the business relied on the relationships the vendors had with me. So I
Right.
couldn't really step away. So we were working very long hours, both of us. And although we were doing very well financially, we just didn't have time to really enjoy life, and travel, which is what I love.
Mhm.
So that's also impacted my mindset, and really, like, that's what's motivated me to pursue that path of financial freedom and passive investing and building a portfolio to ultimately, live our dream and travel. So those
Gotcha.
would be the two separate points I would say have really contributed to that path.
Yeah, there's so much to kind of dig into that. So I may kind of unpack for our viewers over there, or listener. So you mentioned about um you had a business. So before that, did you ever had like a W-2 job, like like going to college? Because a lot of us kind of have the path of like, hey, having to get a job, and like, did you ever had that side of the experience with the W-2 job or day jobs or what they call it?
Yeah, sort of, but I didn't last very long in the W-2 world, I guess. My background's actually in science.
Nice.
So I received my bachelor's degrees from MSU, biochem and microbiology. And I did work a W-2 job for 4 years there in a lab in Starkville, Mississippi. So I loved the research. I still love the learning component of science. But once I started, that's what brought me to Birmingham, was I started a PhD program in immunology at
Yeah.
UAB in Birmingham. So once I got into that PhD program, I just realized that wasn't the path I wanted to take. That just wasn't for me. And at that point, I left the science field, and that's when we started our company. So very
Yeah.
short lived, really only 4 years in the W-2 world before we changed directions.
4 years is quite a bit, I think, compared to some of our other guests on the show there, because they just kind of, you just kind of know that you have the entrepreneur bug. And then what kind of made you thought that wasn't the path where you wanted to be? What was not fulfilling?
Well, I think part of the issue was the politics involved with research, and I guess I didn't realize that whenever I was in the other lab that I was working in Mississippi. The whole vibe was just different there. The lab I was in at UAB, I just noticed the grant funding process was highly political, and it was a very competitive world in scientific research, and I didn't like that.
Yeah.
So, I could go into detail, and I don't think that's the direction we want to go with this call, but I could go into a lot of detail there. But at the end of the day, I just realized that that wasn't for me. And then also the idea of you can never outsource, you can never hand that off to someone else. Like I would have been working long hours forever, until I retired. And that's just not the path I wanted to take. Because even at that point, before we ever started the electronics company, I loved to travel. And luckily, when I had that 4-year job in Mississippi, my boss at the time was very flexible, and she would actually let me have 3 weeks off in the summer.
Nice.
So my husband and I would travel. We would just take road trips for 3 weeks and just go all over the country. And I just really loved that. And I realized that that was not going to be possible with the career path I was following.
Gotcha. So then you it's interesting because you're a female entrepreneur. So I'm gonna ask a little bit more that question is like, how did that transition happen? I mean, there's obviously probably some research that you did get into the electronic business, but how did that transition happen? Why that business?
So the electronics business was a little bit of an accident. I wish I could say that I did a lot of research and decided that that was the most lucrative option at the time, but it was more of I had a friend that was also attending. He was attending college as well, pursuing his master's at the time. And whenever I realized that the science field, or at least the PhD path wasn't for me, I was trying to figure out exactly what I wanted to do, and that just fell in my lap at the right time, where he was moving back to LA and then back to China pretty quickly, and he was going to launch his business in Hong Kong there.
Mm.
And it worked out to where he was going to give me all of his vendor contacts and just kind of help teach me the business and groom me in like the Alabama market, because there was not much competition there. And we worked out an agreement where he would be one of my primary customers moving forward. So basically he would benefit, I would benefit. And I just said, why not? I see the potential. I didn't think it would ever turn into what it did, but I really thought it would just kind of be a stepping stone until I figured out what I actually wanted to do. But it just grew into much more than that. And 6 months later, my husband quit his job. He was working for AT&T at the time. He quit his job to help with the business, and we were off to the races.
That's awesome. That's awesome. And what were you doing during like in that electronic business, if you kind of have to say like your role is? Yeah.
So we were primarily focused on buying overstock so it's a business to business model. I should say that first. Like we strictly wholesaled everything. We didn't retail to the public. We primarily focused on cell phones. So Galaxy, Apple. Apple was our primary inventory item, especially towards the end of that business. We focused more heavily on Apple as the years went on. So iPhones, iPads, MacBooks. We would buy overstock from independent cell phone stores. So I'm sure you've seen the signs in the windows. We buy, we take your trade-ins, or we buy iPhones.
Right.
So whenever stores buy all of those products, they can't resell all of them in their case. It's really too much. So there's always a certain amount of overstock, or stock that needs repair that they can't just resell, or that's recyclable, or there's just a lot of different avenues there you can go with that. So we would focus on being that middleman that would collect all the overstock, and we had the customers to be able to resell it and make that margin in between. So typical wholesale model, I guess. And we focused on building those relationships all over the Southeast to where they knew that they could come to us with any of their overstock.
Nice. And then so from there, how did you start your first investment? I mean, you kind of touched on, hey, we were in doing the business, but realized that it was a trading hours for money again. So then we start thinking about the investment. How did you go about your first investment?
It was really like a light bulb moment for me, because I still remember it was one morning when I first woke up. And for me, it's like whenever I wake up, if it's 6 o'clock, 6:30, it's like there's a lot going through my head. And I remember that was one of the thoughts going through my head at that time was, I kind of knew the amount of capital we had saved over those years. And I'll give you a timeline here. This was like 2017, like early 2017. So we had been in that electronics business for, a good 4 years now.
Mm-hmm.
And we lived well below our means, always saved a lot. So we had accrued quite a bit of capital at that point that we no longer needed to reinvest into the electronics business.
Mm-hmm.
So 2017, I just woken up laying in bed and I just realized, why am I not in bed? Like, we have all this capital just sitting in the bank. If I could just invest this at like a 10% rate of return, we could retire. Like, what am I doing? Like, why am I continuing to work so hard? If I can invest at 10% and then get that appreciation or principal pay down component, that would basically be retirement.
Right.
That would be like the perfect scenario. And I was like, what am I doing? Why am I not focusing on learning that potential business when that's the ultimate way to outsource everything and
Right.
and not continue trading, time for dollars, like you just said. So 2017 is when I really set out to learn the business and to seek out investment opportunities.
How long did that take you to land your first deal?
So I would say I started the educational component in 2017, reading books, attending conference. Well, my first conference was technically 2018, but that was kind of my year of discovery, I guess. I read about all different asset classes. I even played with the stock market for a long time. We sold all our stocks in early 2018 to invest in real estate. But that timeline between when we first started the educational component in 2017 to the first deal was about a year and a half. So late 2018 was my first actual deal, active deal. So we did 2 single family homes and also 3 passive investments prior to that. And that was all like early to mid 2018.
Mm-hmm. And then why did it take us so long, just out of curiosity, from 2017 to just 2018 for you to go to your first conference?
I don't think I
So
knew,
long, sorry.
I don't think I really knew that was an option. I remember in early 2018 or mid 2018, somewhere around in there, I think it was early 2018, was when I was trying to find Facebook groups where I could actually talk to other multifamily investors, because I knew multifamily was what I was most interested in terms of asset class, because it was scalable. That economies of scale component was very intriguing to me. So I was looking for just a network of people that I could talk to about multifamily investing. And I stumbled upon Rod Cleef's Facebook group.
Mm-hmm.
I didn't know he had a conference. I didn't even know he had a book, or I didn't even know who he was at the time. I just stumbled upon the Facebook group and I saw someone post about the conference. So I was like, oh, wow, that's in Atlanta. That's only 2 hours from me. I ought to check that out. But I'm very skeptical, and I thought it might be gimmicky, and I was like, I don't know if I want to go to this, but I'm so glad I did, because just the network of people I met there, and then started attending more conferences, and strengthening those relationships is just so important. So I don't really know why it took me so long. Part of the issue, I think, was because I was still very busy with that electronics business, and I was just trying to pick up books when I could and learn as I could, but I couldn't devote as much time as I should have probably.
And I'm sorry for phrasing that. I don't mean like why did it take so long for you to conference, because I figure like as someone like you learn so much during that whole year period. It seems to be a natural progression to go to a conference. But yeah, I think that's sorry. It shouldn't be like a wait. It's not very long. If listener, you listen to this and it took you 1 year to go to conference, that's great. Great speed, because at least you did something going out there, and I think that's all it really is about. So you went to the same conference. I think you're learning. So what would you say your experience with going to a national conference versus learning kind of on your own on the internet and all the other stuff? What would you summarize that as a difference? Why do you need one or the other?
I think it's very important to network with other people doing the same thing you want to do, because at least for me, it expanded my mindset of the different ways you can structure a deal and the different ways you can make money in multifamily, because it's not all black and white. Like, it's not just one way. There's not one way that's the right way. And sometimes when you're reading books or even in coaching programs to a degree, like sometimes they preach a certain path. And I think it's important, the more people you talk to, the more you realize that there's no one right path. Like, it really depends on like my goals and what I want out of a real estate investment, and life goals. And it's different for everyone. So to me, it just helps talking to that broad network of people to really see the possibilities in multifamily.
Yeah, yeah. And then you did so much action on the first deals. Now let's talk about how did you get into the first couple of passive investment deals, and then we can kind of talk about like your active deal because you started with single family, even though multifamily is where you want to get to. So how that kind of transition as well. So tell us a little bit about your first couple passive deals. What are kind of top couple lessons you want our listener to kind of take away from your personal experience there?
Yeah, it all kind of happened at the same time. So 2018 was just once we started attending the conferences and really hit the gas pedal, I guess, on pursuing the multifamily path, it all was kind of at the same time with the single family and the passive investments and even the first active investment. Technically, the single family came first, and we weren't really looking for single family. It was
Yeah.
more of I was attending a lot of local RIAs and networking with local real estate investors, and most of which were all single family people.
Mhm.
And because they knew that we were interested in real estate investments, those two single family deals kind of just fell in my lap, and they were really good deals. We were able to burr out of and pull all our capital back.
Mhm.
So, we didn't have multifamily yet. So I was like, why not? Maybe we won't single. I didn't really know what direction for sure I wanted to go. So we went ahead and bought those two single family homes right around the same time we were looking at passive investments. The three sponsors or two of the three sponsors that I passively invested with, I met at conferences. So I was able to, continue strengthening those relationships after the conferences and, making additional phone calls and just getting comfortable with the sponsors. And then at the same time, someone I met at a conference
Mhm.
introduced me to someone else in Birmingham that had a JV deal that was a 96 unit deal. So I got into that late 2018, actually closed January 2019. And then so that was a lot happening in I guess a 6-month period of time. And
Yep.
then 2019 was when we really jumped in actively and started buying our own active deals where we were the lead.
Gotcha. Awesome. And
And by we, I mean myself and my husband at that time.
right, right. And then
I
so
think I was delayed there. Sorry.
oh yeah, no worries. I think we're all good. So basically, you met your sponsors in the conference and etc. Now, looking back, because I can think about my passive investment experience when it first started, there's definitely lesson learned from there. Is there things that you would do differently with these passive investments, or still the same process? Like, what are the things that you would do differently with these passive investments that you have invested?
Differently, I,
Yeah.
I think I might be delayed. Can you hear me?
Yep. I can.
Okay, good. I think I had a connection issue there. Hopefully you can edit that out.
Yeah. No worries.
But yeah, as far as what I would do differently, not really anything differently. One thing I might do is not invest quite as much into each deal. I think part of the issue was we had a lot of capital to invest and we threw a little bit too much, like more than the minimum on each of those first three passive deals. And now I wish I would have scaled that back a little bit so I could have diversified into more deals with more sponsors. But it's not like it went poorly. I mean, all three deals have done well and two of them are about to sell actually. So
Nice.
yeah, I think I did all the right steps in terms of vetting the sponsors because, even then I knew the importance of the who, not the numbers, like the who you're working with in terms of the sponsor is much more important than the deal numbers.
Yeah, when you're vetting these deals, so when you mention like, hey, I did a lot of stuff that's correct, can you kind of walk us through a little bit of your process, mostly for our listeners, if they're interested in passive investment, what are some good advices that you will give it to them in terms of getting started on this process and vetting the deals?
Yeah, I think vetting the sponsors is a lot more important than vetting the deal itself, especially if the deal is in a different market that you're unfamiliar with. At least for me, that was kind of hard. If I'm investing in a deal in Dallas, but I don't know anything about the Dallas market because I'm focused on Alabama, it's going to be kind of hard for me to underwrite the deal myself or really look into the numbers.
Mhm.
Chances are the sponsor knows the market way better than I do, or they should, right? If they're buying in that market. So
Right.
I focus more heavily on vetting the sponsor to make sure I can trust the sponsor and therefore trust their underwriting. So it was more about just, like I said, that networking piece, talking to other people that had invested with these sponsors. Word of mouth is big in the passive investment space. So relied heavily on that, and then finding out about, full cycle deals from the sponsor and how their past deals have gone. It's not like every deal has to go great, but if it didn't, I want them to be transparent with me about why and what they're doing to make sure it doesn't happen again. So a level of transparency that I got with the sponsors I chose was big for me.
Gotcha, gotcha. That's awesome. And then that kind of, in some ways, kind of prepare you. What would you say? All these experience, active deals with single family, doing the burrs, and doing obviously the JV has a direct impact to that too. And the passive investment. What would you rate like these three different experience kind of get you prepared for your first active deal?
I would say the JV probably prepared me the most for my first active deal.
Mhm.
It taught me a lot about, partnerships, JV partnerships, and what I want in a future partnership.
Right.
And, also it taught me that the partners matter so much more than the deal numbers. And I understood that with passive investments. I don't know why I didn't carry that over to a JV as much as I should have. I
Yeah.
think it was just because I so badly wanted into a JV to see more behind the curtain, and it was local here in Birmingham, and I love that. And the deal numbers were phenomenal, so I was blinded a little bit by that. But at the end of the day, it taught me what I want in partners. So after that 96 unit JV deal, my husband and I did a 40 unit all on our own, because I was kind of like, I don't know if I want a partner. Like, I don't know if that's right for me at this time. So we did everything on that deal from start to finish. And I think I did that because of my experience with the 96. But
Mhm.
then I was much more selective about who I would partner with from then on. And with my partners now at Astra Equity, I'm so glad that I waited. It's just like a marriage. I know people say that all the time, but it's not just about, you hear people say partnerships and marriage because it's a long-term commitment. Yes, that's true, but to me it's more like a marriage because there has to be that magic between the partners. Like, not romantic magic obviously, but like partnership magic. Like, my husband calls the four of us at Astra Equity lightning in a bottle, and like our lender calls us the core four. Like, we just have that dynamic that's so awesome, and I don't think I ever would have found that if I hadn't had a bad experience previously that allowed me to kind of, take that self-discovery path of what I actually wanted in a partner by doing everything myself and learning what I can add to a team and what I want my partners to handle. So it was great.
Yeah. Yeah. Can you kind of touch on this a little bit more in terms of the partner, like your path of finding the right partner, setting the right criteria? What kind of process? I understand you're a very kind of process oriented person. So what kind of process did you go through so that you ended up with the right partner?
Well, it's not like I was seeking out a certain type of partner, and like, it wasn't a concerted effort to find each partner. It was more like it happened organically, but when it did happen, I knew it was right.
Mhm.
So the way we all linked up was actually Jeremy Porto. He's our acquisitions partner at Astra. He was in town checking on a few smaller multifamily deals that he was buying for his personal portfolio. And he knew I was in Birmingham, asked to meet for coffee. We met, and, we ended up spending the whole day together. He toured one of my local assets, and we could just tell that, maybe not, we didn't know at that time we were going to partner, but we knew
Right.
we wanted to at least keep talking and looking at deals together. Well, he was already partnered with Stuart Dukeman and Rich Trepanier.
Mm.
So it just kind of happened organically at that point. All of us started looking at deals together, and we started JVing smaller deals together, just the four of us. And after our third deal as a team, we knew, like, this is just right. Like, everything works so perfectly and seamlessly within this team, and we all have our strength and our role, and we can stay in that role,
Mm.
and we can just accomplish so much more and scale so much faster. So at that point, we knew it was right. So to answer your question, I mean, it's not really like there was a certain system that led me to those partners. It was more about me just knowing what I want and not settling for less. There was a lot of prior partnership opportunities before I met these guys, and I just knew I needed to make sure it was right.
Gotcha, gotcha. And then you mentioned about after the 96 unit deal, what was your role in the 96 unit JV deal over there? When I say role is kind of I always envision multifamily or any team sports really. There's a certain specialties that you kind of bring in there on the 96 unit deal, and of course we want to kind of talk about your 40 unit deal too. The process kind of go about it as well. Yeah.
Yeah, so the 96 unit, it was a joint venture. So as you know, joint ventures, everyone has to have some type of active role.
Yeah.
But I was not, I mean, my primary role was capital.
Hmm.
I had voting rights. I met the guys, the partners at the property, and like we would make big decisions and things like that. But as far as like day to day, I didn't have the role that I wanted. And that was one reason the partnership wasn't right, because asset management is what I love to do. Well, two of the partners in that deal, they had in-house property management. So as a result, they were like property managing and asset managing the deal, because the two of them property, they had in-house management. So
Hmm.
I wasn't really able to day-to-day asset manage, which is what I enjoyed. So it just that wasn't a good fit for me as a joint venture.
Gotcha, gotcha. And then so then it leads you to, because I would think about this as pendulum. You learn something from the previous deal, and then you pendulum to the other way, the other extreme side. And then so the 40 units you bought by yourself, tell us a little bit about that process. And then what lesson you learned from there so that you decided to kind of partner again. Yeah.
Everything. Like I learned so much from that 40 unit deal, and it was a very heavy lift deal. So when we purchased the deal, it was 80% physical occupancy, but much lower economic, like 60, maybe worse. I'd have to look back at the numbers now at this point, but it was one of those deals where you just really had to get everybody out and
Right.
renovate. And I mean, it was a solid B class area, but this deal was just very poorly managed and no screening when they would put residents in. And it was just really a mess of a deal. So we were able to get it for a great price. So I knew I had that wiggle room to make mistakes there and still learn and still do well.
Yeah.
But ultimately it turned out great. But because I had to do everything from the acquisitions to the construction management and the asset management, and like every little role within multifamily I had to do,
Mhm.
with my husband's help. He would help out with things here and there. But at the end of the day, I realized I really don't like the acquisitions piece that much. I really don't like the construction management. Like I can do it, but I want to pull my hair out dealing with all these contractors. But the asset management just really stood out to me as something I enjoy. I already thought that would be my role. Like even when I was in the 96 unit deal, I knew I wanted to do that. But
Mhm.
the 40 unit just reaffirmed what I already knew. And that's why when I met the three Astra partners, I fit in perfectly, because they needed an asset manager, and especially a local asset manager, because they were focused on Alabama as well. And
Yeah.
it was just a perfect fit, and they filled the other roles.
Gotcha. And then I'm guessing they don't live in Alabama.
They don't. So Stuart and Jeremy both live in Virginia, and Rich lives in Austin, Texas.
Gotcha, gotcha. Interesting. And okay, so basically you kind of realize the power of leveraging others, but not just leveraging money, but leveraging other people's resource, which really is scarce. So the best type of leveraging. So working back into the partnerships over there, how does like you mentioned you guys started with JV for a couple deals before you did syndication. How did that first syndication happen? And then in terms of kind of the lesson that you learned from like doing the JV to syndication, kind of bridging the gap over there.
So we actually haven't formally syndicated a deal.
Yeah.
We have done several JVs where we've brought in JV partners in addition to Astra Equity.
Yeah.
But in those cases, we may split the deal similar to a syndication, like a 70-30 split in that case, to where the management team gets a little bit extra.
Mhm.
But all partners in that case sign the loan. It checks that box for material participation, and our JV partners can take on any level of activity they desire. So
Mhm.
we only JV with people we know very well. First of all, I mean, let me put that out there. It's different than taking a limited partner in a syndication, but
Right.
um, we make sure that it's a good fit for the JV partners we take. And we never want to take more than like 2 per deal,
Yeah.
possibly 3 partners for like a larger deal,
Yeah.
depending. But we want to keep the group small, because we're all on property management calls. Even though I run the calls as asset manager, at the end, all partners can ask the questions.
Mhm.
So we like to keep it small and tight knit, and they can basically be as active or passive as they want to be, as long as we all have voting rights and they sign the loan as well.
And material participate in the operation. And then
Right.
you mentioned a couple things over here. Just kind of clarify a little bit for our viewer, because people think about asset manager. Go on the conference, people talk about asset manager, they're like, oh, construction, I'm really good at like construction, property management, or hey, I'm really good at numbers. And so, what in your mind is the definition of like asset management? Because I noticed you distinguished between construction, asset management, obviously acquisition are very separate. Yeah.
Right. Yeah, I mean it's at the end of the day, it's managing the property managers, right? So like I'm the primary point of contact for property management.
Mhm.
I make sure that property management's well aware of our business plan and that they're following our business plan for the asset.
Mhm.
So, I mean, one thing I do up front before we ever hire a new property management company is lay out our expectations. I actually have a file I've created like expectations for property management. So it lays out exactly what we expect to see. That way, if there's anything that they think is unreasonable, then we address that in the beginning rather than finding out later it's not going to work.
Mhm.
So, in addition to that, I stay on top of lease renewals and move outs and collections and just make sure that there's no trends that are trending negatively that we need to tackle early.
Yeah.
I track KPIs. I make sure that we're maximizing our NOI and property performance.
Mhm.
And you mentioned construction. There is a lot of overlap there. So
Yeah.
Rich Trepanier is our construction manager.
Mhm.
Rich is part of Astra Equity as well. And the two of us work pretty closely hand in hand because obviously there is a lot of timing that goes along with like timing the renovations with the move-ins, with the lease up. And then like we're all on Slack because our property managers are on Slack as well. So that's a place we can all communicate together to make sure that that timing is seamless there. And then
Mhm.
of course, as asset manager, I'm the tax matters partner. So I'm the contact for the CPA and I send out distributions and prepare like a asset management review for our partners and look over financials and things of that nature.
Gotcha. So it's kind of more like people managing the PMs and day-to-day operations, setting the direction where the property is going, and also taking care of the financial side of the things is more, in your opinion, like the asset management piece. And the construction, it's very much managing like contractors and like actually physically supervising the constructions and all the other stuff over there. That's great definition. Thank you. And you kind of allude to this, and I think any great partnerships, it requires everybody kind of fits in a particular role. So your operations kind of asset management role, and Rich's position is kind of like a construction. You mentioned Jeremy is kind of acquisition. What are other roles that's there? Just for some insight for our listeners and viewers over here.
Yeah, so you covered, myself and then Rich and Jeremy, but Stuart, our fourth Astra partner, he's in charge of investor relations. So
Mhm.
even though we haven't syndicated yet, right now it's really just all of our JV partners that we've worked with previously. And, he makes a little video, every month. He does like a video update that shows how our property is performing to the JV partners. And he's also the one that leads our active campaign and our newsletters that go out monthly and having new investor calls. He leads those. Like if we have either a potential LP investor or a potential JV partner, then he'll kind of lead that communication. And he does more than just investor relations, though. I mean, Stuart, he does a little bit of everything, really. He has over 30 years of business experience there. So
Right.
he brings a lot to the table. But as far as other roles other than investor relations, I think that pretty much covers the role. The four of us pretty much cover it. Other minor roles would be things like, fronting the risk capital or, KPing, like, bringing net worth and liquidity. But the four of us, KP and front
Right.
the risk capital for all of our deals. So we don't really need a separate partner for that. But, you will see in a syndication a lot of times a separate partner for those items.
Yeah, yeah, definitely. And why have you not done the syndication? Yes, that's question I am curious to know. Yeah.
Well, as we were building our investor base, I guess, we just noticed that we have a long list of people that have, 400K or more to invest, but they want to JV. They don't want to LP because they want to learn the business. They want to peek behind the curtain more. They want to have that say so. Like they want to be on the property management calls or they want to help make some of those big decisions.
Mhm.
And a lot of those people are our friends and family that we're very close to anyway.
Right.
So I guess just so far up to this point, we haven't needed to.
Mhm.
Even some of the larger deals that we've looked at, 100 units or 150 units,
Right.
if we were awarded the deal, which we've lost out on several here lately, but we would have just joint ventured rather than syndicate. But at some point, yes, we'll definitely syndicate. We have modeled several LOIs we've had go out recently. It would have been a syndication if we had gotten it just because of the purchase price. We can't JV a $25 million acquisition.
Right.
So yeah, it's only a matter of time. But as far as why I haven't syndicated so far, just haven't really had the need because we've been able to utilize these JV relationships so far.
Gotcha. That's awesome. Yeah, because I think guys, like this is very important to kind of hit on is that there's multiple ways to structure a deal. So where a JV model kind of works better for Candace, like a syndication model may work better for you, or even just kind of owning the property yourself is really kind of balance between control and that you have the team in place and what is your investor mix kind of look like on that. So what is your 1 year goal? Now kind of moving into this side of house. I think by now, is it true that would you agree with me that by doing asset management on these type of like a JV deals or multifamily, it's still a very active role versus what you have envisioned initially was when you're doing your electronic business, getting into a more passive investment. So what kind of changed over there? Or
So
what?
a couple of things.
Yeah.
Yeah, I can definitely talk on this for a second or a few seconds. We've had the same conversations within Astra. Yes, we're very active. It's not like I'm retired
Yeah.
by any means. But a few things. So first of all, when we're stabilizing these assets, it's really only the first, depending on size of the deal, only like the first year to 2 years where it's super active.
Mhm.
Once the deals are stabilized and they're kind of on autopilot and the property managers know exactly what you expect, it becomes a lot more passive at that point. I know that from my 40 unit deal that we've owned almost 2 years now. It's pretty much on autopilot. Now, I don't have to do a lot with that deal. It was a ton of work the first 18 months as we were turning all the units, but now we just enjoy the cash flow and I check up on it, look into the financials once a month, but for the most part, it's passive. So that's one route. Once we stabilize all these properties, it will be more passive. The other idea we've been exploring is when we get to a certain point in our growth, we would look at hiring out an asset manager,
Mhm.
and I would train that person to do exactly what I'm doing.
Mhm.
So in the meantime, I'm really working on figuring out exactly how I would train that person, like getting all those systems in place and really just learning myself on how to be a better asset manager.
Yeah.
So at some point in our growth trajectory, I think we will probably hire out that role and also maybe an acquisitions role as well.
Gotcha. Got it. And I'm kind of curious over here too with the JV splits and setup, and then it's okay if you don't want to share that. But I was wondering, like, because all the kind of partner brings similar, like, plays a role essentially. Like, how do you guys decide? And what did you guys decide what your share split would it be?
So Astra Equity gets the extra piece there. So if we split the deal 80-20 or 70-30, so just say 80-20, Astra Equity would take that 20%,
Mhm.
because ultimately we're the ones that have put in all the time to sourcing the deal, underwriting the deal, the due diligence. We put up the risk capital ourselves. We bring the net worth and liquidity for the loan. Even though there's other partners sign the loan, we don't need them to sign the loan in terms of qualifications. So
Mhm.
we have to be compensated for that ultimately. Otherwise, we would just go passively invest our capital.
Right.
So that's
Right.
the way we look at it. And then also day-to-day asset management, construction management, we're handling the majority of that. Now, depending on the JV partner, they, like I said, they can be as active as they want to be. So if they bring a certain strength to the table, we absolutely want to explore that and make sure it's fair. But ultimately, that's what we do, though, is Astra Equity would be awarded that extra split or the management piece of the split.
Yeah, but I was wondering more like within the Astro Equity. How
Oh,
that
I
is
got you.
structured
Oh
because
no.
as
So
someone
we're
who's
equal.
building, yeah,
Yeah, I'm sorry. I misunderstood you there. Yeah, we're equal. So all four of us own 25% of Astra Equity. So yeah, it's equal splits on our end.
Got it. Got it. That's a pretty fair square because then you kind of foresee the future. And tell me a little bit more about things like a process in place. What is your team's kind of cadence between the four principles per se, in terms of making sure, what do you do to make sure that everybody's on the same, um, how do you say, side of, basically everybody's on the same page and that the company is on the same page? What kind of activities do you do over there?
So we have a Slack channel, and there are probably 100 messages that fly daily on Slack. And we all know that if somebody needs to get away or go on vacation or anything like that, we can just mute notifications, and it's easy to just kind of catch back up when we get back. So it's not like an obligation to always stay up to date on that. But
Right.
I feel like that constant communication helps us all stay on the same page. And we it's not that I feel like I have to be involved in the acquisition side, because I know Jeremy has that covered. This is just an
Right.
example. But at the same time, he'll give us updates, so like we know what's going on and we
Right.
see the progress he's making, and we feel like accomplished even though I'm not doing anything. It's like, oh wow, we got an LOI out on this, or
Yeah.
so we all stay on the same page that way. And then we have more than once a week Zoom calls. So there's a lot of communication between us. We have goal calls where we set our goals for the year, and we make sure that we're on track to meet those goals as well.
Got it. Got it. That's awesome. Yeah, because I want to kind of talk about like in the company because keep everybody have the same line of sight. What they call it is pretty important. So
Same
it sounds
vision.
like, yeah, it sounds like you guys do annual planning on the all that sort of stuff. So that's great. You kind of allude to you do use Slack a lot. What other systems would you say is very useful in your line of business? To kind of making sure that it kind of really helped you, um, technologies or tools.
Yeah, for me, at least with the asset, I can speak to the asset management side. For me, it's very helpful to make sure that we are consistent, or I am consistent with the same. Like I do the same task at the same time.
Hmm.
I don't know if this would really. It's a system, I guess, but it's not, maybe not a software like you're referring to.
Yeah.
But for me, it's all about, like, Mondays are my asset management Mondays. Like I always set aside a block of time on Mondays to make sure that I go in and look at the property management softwares and make sure there's no notes that I need to act on. And, I'll look at the financials, and I'll look at, who's renewed or what vacancies we have coming up with. Basically, I just stay on top of things. Like I make sure that I know what's going on with our assets. But I set aside that time on Monday, every Monday, because if I don't have a certain time to do it, I'm afraid I won't stay consistent with it.
Mhm.
So that's my kind of weekly review. And then at the end of the month, I call it just asset management review, but I have an Excel file that I put together, where basically it tracks all of our KPIs for the different properties. We have a collections tracking, like week over week and month over month, and it graphs it out so we can see the trends. And then a budget versus actuals comparison, and it tracks our NOI actuals versus budget, just to make sure we're on track. So I do that monthly and send that out to all the partners for review. That keeps me consistent as well. And then, I mentioned Slack already, but just having property management on Slack has been a great system for us, or organizes that communication and allows us to stay on track.
Mhm. Yeah, definitely. How hard is it for your PMs to get used to Slack?
It hasn't been hard, really. There was one, and this was actually an asset we have in North Carolina, right outside of Charlotte, but that property manager,
Yeah.
he definitely had an issue with Slack. At the beginning, the head guy said that he was fine with it. He didn't really express any concerns with using it, but implementing it was just a kind of a disaster. And we had more luck just picking up the phone and trying to call him, because we just couldn't get him to respond quickly, and it just wasn't what it was supposed to be, I guess. But we actually today or yesterday signed a property management agreement with a different company.
I see.
So we're switching over from that experience. So hopefully, I
Got
really like having all the properties on Slack, because I have a workspace for each property, and it kind of helps me organize. And what's really great is when I go on vacation, I can just mute notifications, and I can keep my phone on loud, so where if there's an emergency, they know they can call me. But otherwise, if my phone's not dinging constantly, and
Oh, that's great.
just kind of helps me get away a little bit.
Yeah, I'm a Slack novice, so we're starting to use Slacks for our syndication stuff. And anyway, That's a great tip, which is the disable your notifications so we don't want it to rating. That's
Well,
awesome.
what's great too is you can actually mute notifications for a certain channel within a workspace. So,
Oh,
like for example, we have our own workspace for Astra Equity too that's not tied to a specific property, but we have channels for all the various different communication topics. And if there's a lot of activity within one channel that I don't feel like I need to be involved with necessarily, I can mute that one channel.
mhm.
Well, that way, if there's communication from one of the other properties or something I might need to see, then I would still get that notification. I'll just go unmute the other one later when I'm not as busy. So it's a very powerful tool. It's helped me a lot.
Mhm. And how much time do you spend, you and your husband, how much time do you spend doing the asset management, doing the multifamily investing a week?
Right now I would say it's about 40 hours a week
Okay.
for me.
Mhm.
My husband is probably less. His main role right now is with our local assets. He'll go make sure the contractors have actually done the work that they're supposed to, and he'll report back to Rich because Rich is the one in communication with the contractors.
Right.
So he's kind of the hands-on one. He actually does some of the work for us, like physical work as well.
Mhm.
So that's his role. So he probably doesn't work quite 40 hours a week, but he also helps a ton with watching my son and doing some of the housework and things of that nature. It's kind of a role reversal from what some people might think, but it helps me a lot, which is what's important to him.
Yeah.
But as far as me, about 40 hours a week. I try to keep like a 9 to 5 schedule, but sometimes, as I'm sure you know, it doesn't
Yeah.
quite fit into those hours, but it's close.
Got it. Got it. And so how close do you feel like that is to your end goal? Because again, going back to the what we initially talked about it is like you get out of electronic business so that you can maybe not work less, but maybe it's fulfilling a need in terms of like challenge or accomplishment, that type of things. But is that kind of like what you foresee yourself day to day be for the next like 5 years? Let me ask that question instead. And then where you kind of envision in terms of time differences over there, or your fiscal goal in 5 years, or personal challenge, whatever you will have it.
Yeah, I mean, one thing I will say is even though I say 40 hours a week, it's still much more flexible. I don't have to keep certain hours, obviously.
Uh-huh.
Um, in 3 days, we're actually, my husband and I and my 4-year-old, we're all going to Aruba for 10 days.
Nice.
Well, I know that my partners have it covered. They keep up with the asset management piece enough to where they can step in and cover for me when I'm gone. And it's the same for the three of them. When they're on vacation, one of us steps in and takes over their role. So having those partners is big because I mentioned earlier how much I want to travel. My husband and I both love traveling, and our son, we want him to have that same passion. So
Mm.
I'm able to do that. Whereas I wouldn't have been able to do that before with a typical 9 to 5 type
Yeah.
W-2 job.
Yeah.
But 5-year horizon, it's so hard to say because I want to say that I probably won't be working 40 hours in 5 years. But then again, I love what I'm doing. So until I get to that point of not being, I'm okay with it right now, I guess is what I'm saying. Like, I
Yeah.
really enjoy it and I'm able to take off when I want to take off. And that's what's most important. I think it'll come to a point where we build the portfolio to a certain level. And then it's just kind of like, let's just kind of maintain what we have, reinvest the capital coming in, but maybe not push quite as hard on acquisitions.
Yeah.
But I can't say if that'll come within the 5-year horizon or not, because right now I'm having too much fun building it.
Yeah, yeah, because the buy and hold, that's where the hold is actually reaping back the benefits of that. Because I'm assuming all the property that you buy, you're kind of having the intention of holding. Maybe selling some of these if you don't want to hold them anymore, which is great. It's a great strategy over there. And so for someone who just kind of started on this journey, or someone who's kind of interested in getting into this, what would your advice be like to your 2017 self?
I would say, like, don't fear the unknown because that was my big problem. Like, if I don't understand something or if I don't know what the outcome might be, I'm scared. And then when I'm scared, fear leads to inaction. So I would say, like, definitely don't fear the unknown. Like, whatever you don't understand, get out there and understand it, do it, because doing is the best way to learn.
Mhm.
So it's kind of like, don't get stuck in analysis paralysis. Make sure you have enough information to make a calculated, strategic decision, but then just do it.
Mhm.
And I would also say to make sure that you know your personal investment criteria. Don't just assume that the path preached at these conferences is the only way, because I feel like sometimes at conferences, and maybe it's because a lot of the people don't have capital to get started, and they know that joining a larger syndication with a minor role is the only way for those people if they can't buy their own properties. And I'm definitely not undermining the power of partnering on larger syndications. It's great. But at the same time, maybe buying a 20 unit is the best thing for someone, So I think that you just really need to it's that introspection of knowing like what's best, what's best for that investor, like what's best for that person, and what their ultimate goals are and the best way to achieve it. If they want to learn operations, then raising capital for a deal probably isn't going to be the best way to learn operations, unless the partner, that sponsor is willing to let that person have an active role in operations.
Right.
Maybe buying a 20 unit deal is the way to learn operations and scale up from there. So it's just really depending on that person's goals.
Definitely. And for someone who's kind of trying this out, definitely, you leveraging the partnerships to get to learn different kind of roles. Not everybody has to be like Candace and buying the 40 units herself and do everything herself. Kind of having that fire on her, here on fire sometimes. But it maybe it's a better way to kind of partner, and you can that definitely touched on the importance of partnerships. You mentioned you have a 4-year-old. And so it kind of wraps up on what we have, conversation over here, is we always kind of go full circle in our in interview. So what are you doing right now for your 4-year-old, to kind of show him there's a path other than the 9 to 5s, and there's a path to being an entrepreneur, and being a financial independent person. Yeah.
Yeah, I'm definitely trying to start that early. So just simple things like we played Monopoly the other day. And you can play Monopoly and not learn anything from it, or you can play Monopoly and learn a lot depending on the narrative that goes along with it. So, I was trying to talk to him a little bit about assets and liabilities and what that means. And it was so funny though, because I think he instantly equated liabilities with toys. So he was like, oh, I want liabilities. Can I have liabilities? Like, no, that's not the point. But he's 4, I have
Yeah.
to, but I want to have these conversations early. And I think that's one thing I've always focused on with him is I don't treat him as if he's a baby ever. Like I try to be completely transparent with him and have adult conversations to a degree, like obviously age
Yeah.
appropriate, but I just want to make sure that I start that narrative early with him. He comes along with us a lot of times. He knows we buy apartments,
Mhm.
and he knows, or he will soon know why. I'm trying to teach him why, but I think he's a little bit too
Right.
young to really understand the why.
Mhm.
But I'll make sure that within time he'll know.
Yeah, that's awesome. That's awesome. And then because you're a female entrepreneur, and it's kind of rare, little rare in the multifamily commercial space. And what are some tips you will have for other women, aspired women, wants to kind of get into this business? Life partner, as well as learning, like professionally as well as personally. What are some tips that you can share with them?
I think mindset is so important. And I say that from the angle of I hear a lot of women in the space say that, what are the disadvantages of being a woman in the multifamily space because we're the minority? You shouldn't even think that way, is the way that I look at it. Like, don't think of it as a disadvantage. If anything, women have an advantage in the multifamily space because we're memorable. Brokers remember me.
Mhm.
Investor. I have a lot of investors that probably wouldn't invest with me if I were not a female, just because I attract a lot of the female crowd, I guess. There's just several things. I guess it's all about looking at the advantages, not looking for the disadvantages, and really harnessing those advantages and growing from there. So that would be the advice I give: is play to your strengths.
Mhm.
Don't dwell on the potential disadvantages. I don't think there's a lot of disadvantages really to being a female in this space.
Yeah, that's awesome. I love that piece of advice, which is kind of see what your uniqueness are, and then
Mhm.
kind of really play into that uniqueness. And then in terms of personal wise, how do you balance your work life? now that everybody's working in the business, including your son?
Yeah, I mean, I'm definitely not the best one to answer the question because I've struggled with that as well. But trying to keep the 9 to 5 hours has been great for me because, especially when we had the electronics business, I was not working 9 to 5. Like I was like all over the place, and we traveled a lot, and not fun travel, like work travel. So I didn't have a lot of balance there, I guess. And that was really when my son was, just born, because he's only 4 now. So,
Mhm.
but starting this year, I've tried to really schedule everything between 9 to 5, even calls or meeting, just schedule them during those work hours and take the weekends, for Carson. And then
Yeah.
Carson's my 4-year-old, and my husband as well. So the other thing I've done is just really try to mentally be present, not just physically. And I'm still working on that because I'm bad about like thinking of everything I have to do. Like even if I'm done for the day, I have like a
Right.
lot running through my head and I can't turn it off.
Right.
So I'm trying to be more mentally present and spend quality time with Casey and Carson rather than just being physically present and being off in another world.
Yeah, yeah, definitely. I think that speaks to a lot of challenges female entrepreneurs may have in terms of balancing the lifestyles and etc. And what do you keep your motivation going? Because when we're growing our business, you are doing a lot of challenge things. How do you keep your motivation going? Do you have a certain routine?
I wouldn't really attribute a certain routine necessarily. By nature, I'm very motivated. Like I've always been very motivated. I was that type of student that, even in grade school, that
Mm,
always had the perfect grades and all, valedictorian, and I've just always been like, I have to, like, I'm a
yeah,
perfectionist, which
yeah,
is good and bad. Like obviously it definitely has its downfalls that I've worked on. But so I'm motivated by nature. I don't really have any certain routine to be motivated, but I do make sure that I prioritize my task list into like high priority, medium priority, low priority,
mhm,
to where, with my schedule, obviously I have like meetings and, Zoom calls and things of that nature that are pre-scheduled, but then the gaps of time in between all the scheduled calls is when I tackle my task list, and I start with the high priority and work down from there.
yeah.
So I try my best to close everything out by the end of the week. And, sometimes that means I work a couple of extra hours past that 9 to 5, but I just love the feeling of having everything checked off
That's
my
awesome.
task list.
I think every team can use a person like you. That's awesome. And how do we find you in Astro Equity? If
So you
other
can visit
people want
our
to connect. Yeah,
Yeah, you can visit our website. So astraeq.com. So that's astraeq.com. Or you can email me at Candace, Candace at astraeq.com. Or you can also find me on Facebook and Candace Pilgrim. Feel free to reach out, especially if you're interested in the Alabama markets.
that's awesome. We'll put that in the show notes over here. Thank you so much, Candace, for your time today. It was a wonderful chat with you and for me to get to know you. And thank you so much for that. Yeah.
Yeah, absolutely. Thanks so much for having me. It was fun.